Okay, so this is actually a question from transfer pricing. Let me see this situation. It says that required under the current transfer pricing system, prepare a profit statement showing the profit for each of the division and for Bath company as a whole. So under the existing system, you have to calculate the divisional profit and the total profit for the company. And then it says that head office is considering changing the transfer pricing policy to ensure maximization of company profits without demotivating either of the divisional managers, and then calculate the maximum profit that could be earned by a Bath company if transfer pricing is optimized. So we need to prepare two profit statements, one before the changes and one after the changes. So let's see what changes or what is happening. Now, one thing you should remember that when you are doing transfer pricing question, you should spend good time on understanding the scenario. Calculations will not be very difficult or very long, but scenario could be confusing. So you should be very clear on what is happening. Okay. So let's start sketching something, what is happening. It says that Bath is a company specializing in the manufacture and sale of baths. Each bath consists of a main unit plus a set of bath fittings. So you have a main bath unit plus some bath fittings. The company is split into two divisions, A and B. Division A manufactures the bath and Division B manufactures set of bath fittings. So I know that there is Division A and this Division A is making bath. Let me call it B, bath. Okay, let's not put B because we will be confusing. And there is a Division B, which is also within the same company and it is making fittings. Okay. So I'll put it like this. Currently, all of Division A sales are made external. So Division A sales, all of them are external. So they sell goods to the external market. Division B, however, sells to Division A as well as to the external customer. So Division B sell some goods to A, their fittings, and probably some they sell to external. So Division B has internal sales. A does not have any internal sale. B sells some goods to inside within the group, within the company to Division A and to outside customers. Both of the divisions are profit centers. So if they are profit centers, it means that they are responsible for the profitability. So Division A currently selling price for each bath is 450. 450 they charge. Okay, so I understand here they are selling it for 450. And cost per bath fittings from Division B 75. So they are selling fittings to $75 here. Okay, so that's clear. Um, Other material from external supplier. So they also get some material from external supplier for 200. And they also have some labor cost of 45. So you should understand that their variable cost, this Division A variable cost consists of three things: 75 fittings coming from A, 200 external cost, and 45 is 200 external material, 45 is labor. And then they have some annual fixed overhead of 7.4 million. Their annual production and the maximum annual market demand is same. You should always pay attention on this thing, okay? So that we can find out what is the production, what is the demand. Their production and demand is equal. Whatever they produce, they sell. So this is what we understand about Division A. Now let's see what is happening with Division B. Let me erase these numbers. These lines I will erase. And we'll go like this for Division B. So Division B, external selling price per unit is 80. External, so they are actually giving 75 to here, but when they are selling to external customers, they can sell for 80. So it means they are selling little cheap inside. And current price of sales to Division A is 75. Okay. Material, so their material costs are 5 and they have a labor cost of 15. And then they also have some annual fixed overheads, 4.4 million. And this is very important information to remember, because maximum annual production is 200,000 units. Maximum annual demand external is 180, and maximum annual internal demand is 80,000. So you see that their production is 200, but if they want to sell all to outside and inside, it is 260,000. So it means that there must be some compromise. Either they will not sell to external parties or they will not sell to the internal parties, because they cannot supply both. Their demand is more than their production capacity. So this is important point to remember. Now, the transfer price charged by Division B to Division A was negotiated some years ago between the previous divisional managers, who have now both been replaced by the new managers. Head office only allows Division A to purchase its fittings from Division B. Now, that's a big problem. Head office says that Division A will only buy from Division B. So it means that under existing situation, this 80,000 unit Division A, B must be selling to A. So it means that they are selling, they are not giving this outside. To outsiders, they are only giving 120K, because this is what they are left with, because their total is 200. If they give 80,000 inside to the external customers at the price of $80, they can only sell 120,000. Okay, although the new manager of Division A, this one, the new manager of Division A believes that he can obtain fittings of the same quality and appearance for $65 per set. So Division A manager is not happy, because he is buying it for 75 and he believes that he can buy from outside in 65. So he thinks that he is paying $10 more. So he is not happy. He was given the autonomy to purchase from outside the company B. So if he was given, so there is a word if he was given the autonomy to buy from outside, Division B makes no cost savings from supplying internally to Division A rather than selling externally. So what does that mean? It means that Division B, when they sell them cheap, they are not making cost saving, costs are same. So what I understand now, Division A is unhappy because Division A believes that he is paying $10 more. So he is clearly unhappy. And Division A and Division B is also unhappy, because Division B can sell outside 80,000. Okay. They can sell outside at the price of 80, but he's selling at 75. So he thinks that he is also making a loss. So with the existing scenario, both parties are unhappy. A thinks that I am buying expensive, and B believes that he is selling cheap. So now this is the existing scenario. And if you remember in the question, number part A, they told us that calculate the profitability of both the divisions and the company as a whole. Now we need to make the structure. So let me now clear it. Any questions until here? If you want to ask, please ask. Okay, so we move forward. So let me clear this thing now. We have to do the calculations, and you should be very careful on the format. When you do long questions, transfer pricing and any other, you should always be thinking of making a good format, because the format will make it clear in your mind. Sometimes if your format is difficult, format is confusing, so then you make more mistakes. So make a clear format. You need Division A, you need Division B, and you need the total for the company. Okay, total company. So these are going to be my 3 columns. And of course, we have to make the profit statement. We have to make the profit statement. And when we say profit statement, it means that we are going to start with the sales revenue. And when you make the sales revenue, you should be doing always internal and external. So how much is your external revenue? And how much is your internal revenue? Because both of these should be considered, and this will give you the total revenue. So if we know the numbers, what are the numbers? So the sales revenue I'll put it here like this. External revenue. Now, thing is that division A is the one who is making the bath. So division A does not have any external revenue. They do not, they do not have any internal revenue. They only have external revenue. So how much is their external revenue? You can show calculations somewhere. Maybe I can do workings here. Uh, or maybe I can just do it there. Let's do working here. So external revenue, I will show here the calculations and then numbers I will take on the top. Okay. So how much is the division? And by the way, these are in millions. So never forget to put 3 zeros on the top, because like we do in all questions, we don't write down 6 zeros. The last 3 zeros we are taking on the top. So that we make it a little bit more clear. So division A, if I talk about division A, their external revenue, how much are they producing? They are producing 80,000 units. Okay. This is what they produce, 80,000 units. And what is the price of each unit? The price of each unit was 450. This is given in the question, that they sell 80,000 and their price is 450. So this is going to be their revenue. So 80,000 into 450. This is what I need to do here. I put it here, external revenue, and I put it like this. And by the way, you should be dividing it with 1000 so that you get the numbers, because we put 3 zeros on the top. So we can just show it with 3 zeros. And they do not have any internal revenue. Their internal revenue is 0. So I can say that division A total revenue is 36,000. That's done. Then division B, what do they do? Division B has some revenue external and some internal. If you remember that division B, their total production capacity was 200,000. So they were giving 80,000 internally and 120,000 they are giving externally. Externally, they are selling at $80, and internally these 80,000 units they are selling for $75. So you can make your calculations for revenue for division B, as external revenue is actually only, okay, no, this is not 120. I'm sorry, they are fooling. Yeah, their external revenue is 120,000 because internal is 80. So I should be doing 120,000, which they sell outside, multiplied by 80. And I say, let's say divided by 1000. And what do they do internally? Internally, they are giving 80,000 units at the price of 75, and let's call it divided by 1000. We are just trying to eliminate those zeros. Okay. So that's why I said divided by by 1000. So this is their external revenue. And let me put here 0. And if I say this much is your internal revenue, and I put here 0. So they will come up with a sum total of, 15,600 in their revenue. This is the revenue for division B. Now, when you make a total, here you should be, paying attention. How to make the total. Remember, within the group, the transfer, the intra-group things you cannot add. Like if I make a total of these two, it will become 51,600, which will be wrong. You cannot make like this. If you make 51,600, it will be a wrong answer, because there are some intra-group sales, and those intra-group we should subtract. We will only be showing this revenue here. Okay. The revenue which is external to the group, 45,600, and this revenue should not be treated at all, because it is the revenue within the group. We just ignore it. So you've got this line, revenue for division A, division B, and the total company. What you need to pay attention, that do not take internal revenue in totals. The next thing is you will do your variable costs. And your variable cost include, in the question they say external materials, and I say internal materials, and we have labor costs. These are only the three components which they have given us: external material, internal material, and labor cost. And after that, we will be calculate charging our fixed costs, and then we will calculate our profits. Okay, this is very simple profit statement. So external materials are how much? Now you are talking about division A. Please remember, division A is buying from outside. What they are buying from outside? If I see here, so what are they producing? They are producing 80,000 units. Okay, so their total production is 80,000 units, and they buy some material from outside which says other materials from external supplier $200. So 80,000 multiplied by 200, I would divide it with 1,000. This is what they are buying from outside. And then internal material, they are buying from inside. They are buying 80,000 units from internally at the price of $75. I'm sure that we remember that it is $75. And let's do like this, because these are costs. So we can just multiply them with -1 so that we get negatives. So when we make totals, it will not confuse us. So this is the external, internal, and what is the labor cost? Labor cost is again 80,000 units they produce. Each unit is $45 divided by 1,000 into -1. Let's call it like this. So they've got labor cost as well. And now we will say that, okay, this when you make, so you have, let me call it contribution. So contribution means the selling price minus the variable costs. So their contribute. Okay, let's make a total of that. Okay, let me do like this. We'll make a total of all these. Okay. I'll make a total of all these. So their contribution is 36, 16, 6. How come it is 10,400? External material, internal material, and labor.
Sir, there was some difference in labor cost formula.
Why? Labor cost?
Sir, because you didn't put brackets, maybe that's why.
No. It should not make any difference.
Okay, sir.
And then you have no problem. We get our contribution. So this is
That's right.
I think it is correct.
It's correct. It's correct.
Then we have fixed cost. And how much is the fixed cost? Fixed cost is 7440. The last three zeros I will ignore, and I will make here this much. Okay, it's wrong. I add it up. Oh, so there are not like this. And we get here your profit. So this is the profit for division A. So we make this line like this, and we put it like this. And we also make a little bit of formatting. So division A is done. Now, if you do division B, external materials. So division B is buying all of the materials are external. Division B does not have any internal material, so I make it 0. External material, they are producing 200,000, and for each unit they are buying from outside $5, and their labor is $15. So I 200,000 multiplied by 5 divided by 1,000. Then I would say that they have here their labor cost. Labor cost would be 200,000 units multiplied by 15, divided by 1,000 multiplied by -1. Let's do like this, 3,000. And this should also be multiplied with -1. So this is their variable cost. And if I put here this formula, it comes like this. And then we put up their fixed cost. Their fixed cost was 4.4 million. Okay. So we put here minus 4,400 and this comes here 72. Oh, that's a big number.
Is it not 120?
Which one?
The variable cost for
Uh,
minus 1,000.
so 15,600 is the revenue. This is variable. This is variable. External material and the labor. You get contribution 11,600 minus the fixed cost.
Total demand is 120, not 200,000.
No, 200,000 was the production.
Okay.
We are talking about the total production of division B.
Right. Okay. Okay.
Now, I know that we have to calculate this one, but before I calculate this one, I am super excited to see that what percentage they are making of the sales revenue. So if I see they are making something like 8%, or to be more precise, 8.2%. And he is, mashallah, doing 46.5%. So when division A is crying, there is a reason why division A manager says that I am buying $75. It is expensive for me. So division A manager has a reason to cry. But now let's see, talk about here. This one you can make a total. This is your external cost. So external cost you can make a total. This internal cost you will just forget. Just like we forgot here internal revenue, you will forget about internal cost. Don't make a total of internal cost. And then of course labor cost you will make a total. And then you will see what comes here. And this much you can also make a total. And then this much you also do like this. So it is 10,160. This is the overall group profitability. If I want to calculate this thing, it is something like 22.28%. They didn't ask us this thing, okay? This is just we are doing ourselves out of curiosity. Now, what you see that you subtracted this, this group revenue, you ignored. Please pay attention. Don't make a mistake in exam. And this 6,000 you ignore. So we ignored it from the cost and we ignored it from the revenue. We cancel this, eliminate. We subtract it from there, we subtract it from there. That's the proper way of doing it. So this is our existing. Part A was 8 marks. And in part A, they said that calculate the profit of division A, division B, and for the group in total. So this is done. Now, if we have to do, did I take any numbers? No, I can just remove it. It doesn't make any changes here because they said I would say profit statement. Let me call like this. Before changes in transfer pricing policy. And then I need to, let me put it here. So this is what we made like a profit statement before changes in transfer pricing. And what I want to do, I'll just copy paste it. I will say profit statement after changes in transfer policy. This is your part B, okay? This is what they asked you in part B. This was our part A. Part A, they asked us to make it before and this is after. So let me copy paste this thing, okay? And I'll put it here so that we can use the same table. We don't have to, because few things will remain same, few things will change. So I'll just take, can you people see this Excel file?
Yes, sir. So one small doubt.
Yes, please ask.
Yeah.
So now before you start making this profit statement after changes in transfer pricing, you need to understand what is going to happen. So let's first discuss the scenario and then we put the numbers. Putting the numbers will take only 2 minutes. You know what? You are making 200,000. And before the head office said that this division B must sell to division A. And therefore all of this 80,000 we were giving internally. And we were selling externally only 120,000 because that was what was, we had we have total 200,000. After 280 we gave internally, so externally we were selling only 120,000. So division B was also suffering here, because division B was selling $5 cheap. They could sell it outside for 80, but they are selling it for 75. They are selling it internally. So now both of the divisions will be happy, because division A will go and buy from outside for 65. Their cost will go down. Division B will also sell full 180,000 units outside for $80. And they will think about, now that's very important, what they need to think. You know what will happen? Their capacity is 200,000. Out of 200,000, 180,000 they will sell to outsiders at a price of $80. And then they will have a $20,000 units extra capacity. So this 20,000 will become extra. What they do? Now they go to division A, that see, I have some extra units, because their capacity production is more, but external demand is less. So whatever is the external demand, they will sell it. And then they will go inside and they will ask division A, I've got 20,000 units. If you want to buy, please buy from me. And division A should buy. What price they should be offering to division A? Can somebody tell me? Before they were selling it to 75. Do you think division A will now buy these 20,000 units for $75 from them?
No, sir.
How much division A should be buying?
Sir, marginal cost.
Plus opportunity cost.
Maybe division A will say, I'm getting it for $65 from outside. Yeah. This is what division A manager said. He said that I can buy from outside. So whatever I'm buying from outside for 765, you also give me for 65. This is what you should be doing. Let's make the numbers. So what is the external revenue for division A? Will this number change? No, for division A, it will not change, because division A was selling outside to before. It is still selling outside to now. So they don't have any external. This 36,000 will remain same. Their internal revenue was 0. What will happen to division B? Their sales. Division B will sell to outsiders now. How much they will sell? 180,000 units, right? This is their external demand. At what price they will sell it? $80. This is what they can possibly sell it, and divide it with 1,000. So this is what their internal revenue will become. External revenue will become. Are you clear on that, Karthik, Ambar, Aziz?
Yes, sir.
And
Yes,
what
sir.
will be the internal revenue?
20,000.
20,000 units multiplied by $65 divided by 1,000. You know, where did I get this $65? Because division A said that I can buy from outside from the market for 65. So division A will have no reason to pay more than 65. And that's why we just take 65 here. So this is the revenue coming in for the group and for the divisions. No need to change formulas. Everything is in place. Let's talk about external materials. Division A, how much will be their external materials? If you remember the formula, before they were buying 80,000 units from outside, they still are buying 80,000 units from outside. Remember division, let me drag the question down so that you will see the data. See here. I'm making for division A external material. Division A, how much is their production? Their production is 80,000 units. And they buy from it externally $200. This will remain same as before, okay? There is no change in this $200. And just divide it with 1,000, multiply with -1. So their cost will be external material cost will be 16,000. $80,000. And then how much is their internal material cost? And by the way, there will be one more line, or you can actually make changes here. See here, this division A, this number is wrong. This number is not correct. Because what will happen that now division A will buy. Let me write down the numbers from you, okay? Let me write down the numbers so just to be quick. Division A, what will happen? Division A was purchasing these 80,000 units from outside for 200. There is no confusion about that. So that number will remain there. Plus, they will buy 60,000 bath fittings from outside for 65. Because we allowed them to go and buy the bath fittings from outside. Their total demand is 80,000. Out of 80,000, 20,000 division B will give internally because division B has extra capacity. But 60,000 they can buy from outside at a price of 65. This should be your answer and multiplied by -1. This should be their external material cost. Now external material cost will increase because fittings they will also buy from outside. Before they were only buying this 200 from outside. Now fittings also coming from outside. And internal cost will be this one. The same, you know, like they will buy 20,000 fittings at a price of 65 into -1 and divided by 1,000. Divided by 1,000. 1,300. And labor cost will remain same as it was before. Contribution was like this. This will remain same. So no other changes. Only you have to change, make change in the external thing. Now their variable cost, external materials, 1,000 they were buying from outside, and their internal materials were 0, and their variable cost like this, and their profit will become 73. Now, if you pay attention, this is actually the number which you have just made changes. Where did you make change? You made change only in external materials. External materials and these internal for them. These numbers I have changed. Other things essentially are the same. And now if you see that what was the profit before and what is the profit now, let me just delete one line to make it clear that what is happening. After applying this policy, this division profit has increased. This divisional profit has increased. But if you see that overall, the group profit has gone down. The group profit overall has gone down. So is this transfer now? If they ask us, now what did they ask us? They did not ask us to recommend something, okay? They only asked us to make this thing. They said that head office has allowed it to do it and just calculate it with after the transfer pricing. If they ask you in part C that should this transfer pricing policy be adopted, answer is no, it should not be adopted, because overall the group profit has actually group profit has, before it was 10,160, now no, it has also increased. Group profit has also increased because the total revenue has increased. So in terms of percentage, maybe it has gone down, but in terms of dollars, it has gone up. Before it was 10,160, now it is 11,060. So it means that this pricing policy can be supported because in terms of dollars, it has gone up. So this is a transfer pricing question. Calculations are not really very difficult once you make the format, and trust me, you will do few questions and you will become clear with that. Calculations will not be difficult. The only thing is that you don't make a mistake in the scenario. So I would suggest that when you do this question, just make a quick sketching that what is happening. Because if you make a mistake in your assumptions, or if you make an, make some mistake in overall understanding of the process, what is happening, your numbers will be wrong. Otherwise, it should not be very difficult, but it does take time, and it's a very important topic for ACCA F5 long question. You don't get a short question from transfer pricing, you get a long question.